What's up, everybody? I'm Victor Quick, and you can find me at oneuphomes.com, where you guys could partner up with us. We flip homes, buy homes, and you guys could get in the deal with us live.
Hey guys,
Also,
RG Williams on this side, successwithrg.com for the training. You want to learn how to do it. We got the properties, we got the training. I'm the guy that's been behind the scenes forever. Victor's the guy behind the scenes of hustling the properties. We got a one team. Victor and I started talking this week about one of the questions we always get is, where do you get the money? Right? So what are people asking you, Victor, when hey man, how you doing all these deals? Because you're just this guy I know from work.
Yeah.
Right.
Much.
So what are you finding, man? What are they telling you?
Man, people, when they partner up with us, in order to partner up, you guys gotta put a little bit of investment, to get in the deal. So they're like, man, I want to partner up. Where can I get deals from? And so, I kind of tell them when they're starting off the way I started off. Where do you have money? Do you have property? Do you have equity? Cash out, refinance. Do you have good credit? Credit cards, loans, lines of credit. I think those are the best ways to starting off, to begin.
Wait, so have you ever bought a house on a credit card?
Not totally, but at this point we actually kind of could.
No, 100%. Yeah. So what do you mean by that? Is you're saying that if they have a little bit of credit or a little bit of, they could get like a cash advance and use a little bit of that as they team up with us?
Correct. You can do that. And and the cool thing about that is you might start off small. You might get a limit of 5,000, 10,000, 2,000. But you know what? As you keep growing and using it and paying your payments, man, we're up to some of our cards up to $80,000 credit card. So, and we have about, together with me and Deanna, we probably have about 40 credit cards each.
Gotcha.
So,
gotcha. See, because I'm when I came into the business, now Victor and I have come together as a good team. I got a little bit longer, as you can tell, with all the gray here, all the gray beards.
Hey, I'm right there too.
Yeah, right. That's called stress in the business, buddy. So I was never taught to buy on credit cards. So let's kind of break it down. I think there's three areas of money. There's the traditional stuff that everybody knows, right? You go to a bank, you go to a credit union, anybody that has a mortgage loan, and you get the traditional stuff, which is FHA, VA, conventional, all that kind of stuff, right? And to me, that's the hardest money to get.
Oh man, the restrictions, what they ask for, your W-2s, your taxes, it's really
because
if you have all that.
Yeah, right? Well, see, then there's the challenge of when you're self-employed like you and I, you have different filing dates. You have different records you have to keep. It's not I got 12 checks or 24 checks because I get paid twice a month, right? I don't have all of that, and ours are so different. Man, we didn't get paid this month, but we got paid a lot next month.
Exactly.
Then we have all this write-off, and then we have on. So everybody says, well, isn't hard money hardest to get? And I'm like, no, the traditional money's hardest to get because they base it on your credit.
Yeah.
And more on your credit than the deal.
Big time.
Right? Because your credit, you and I know we have to have a certain appraised value.
For sure.
Right? But that's the same with conventional. They have to have a certain value to be able to loan that.
To approve that loan, correct. Yeah.
Exactly. Okay.
So it's the same thing, but
every loan we deal with you got to have skin in the game. You brought that up. You got to have skin in the game. Right? For those that are brand new, skin in the game means some of your money.
Yeah.
Okay.
Exactly. Eventually, we'll get there, I guess, later. You literally don't need credit and you literally don't need money. But to start off, I think you have to use everything you have. You have to leverage your credit. So in this game, you don't need credit, like I mentioned, but it does help start off.
You can move faster, right? Because I came into this game after my divorce. I had mine was like a 480 FICO. I was under 500, my credit score. So nobody'd even want to smile at me. Right? I'm not getting a credit card. I'm not getting a loan. No. Okay, well, then I had to figure out how to do it creatively. So I am a poster child that says you don't have to have credit. Right? With my divorce, I was making $6.86 an hour. So I'm a poster child saying you didn't have to have any money.
Yeah.
Right? But your point is so powerful because you can, if you have credit, you got more avenues. You've got different options.
You have a better head start for sure.
Okay, so now we know traditional stuff, and most everybody's comfortable, or at least they know traditional stuff. What is hard money? We throw that term around in this industry. We throw that term around, and people sit on the outside and go. I mean, I was talking to my daughter a few minutes ago, and she's doing long division with paranomials or something. I'm like, exactly. What the hell is that? And I just, okay. But that's how people see with hard money.
Yeah.
So what's hard money, brother? What's hard money?
Man, pretty much hard money is easy money. The only reason it's hard is because it's expensive. But it's okay if hard money makes 30 grand after I do my deal, but I make 80, it's okay with me. So I think that's where it gets caught up because it's expensive, you know, but there's nothing hard about it.
So throw that a little bit deeper because you just threw some really cool numbers in there. But okay. When you get hard money, when you say it's expensive, it comes with high numbers, right? High interest rate, higher interest rate. Yep. And then it comes with shorter terms.
Shorter terms, yeah. So you got to know your stuff because you don't want to get stuck because they'll take the property. But they'll work with you. It's depending the relationship you have.
Right. And then it has what? Their values. How do they rate their values? Do they my experience is you can run two different kinds, right? Or there's two different thought patterns in the hard money is that they will do it off of loan to value, LTV, and others will do it on ARV, paired value, the ARV.
And I love the ARV because they lend you more. They go off that math.
But does that then cost you more in interest rate?
It does.
Why?
I guess because they're lending you more money. They have more skin on the game. And so they're like, hey, wait a minute, it's a risk for us. We're going to have to now charge you a little bit more because
so they offset their risk with a higher return. Perfect. Yeah. Okay. Then the other thing that everybody hears, I'm sorry, go ahead.
No, go ahead.
I say the other thing everybody hears are points, right?
Points, yeah.
You got to have points up front. Well, okay, there's points, I'm pointing, right? What the hell is a point? And I've always just said that 1 point equals 1%.
Yeah, pretty much.
Of the amount borrowed, right? You borrow 100,000, you pay a point, and that's money up front, or 1%. You pay that up front. That's your skin in the game.
Yeah, to get the loan for sure.
Okay, so now I have skin in the game, closing costs, and so forth. My time frames: 3 months, 6 months, a year, 2 years. What do you get?
Normally I stick to the 9-month plan because normally we're in and out between 3 and 5 months. So I'm like, the shorter the term, they feel comfortable and they see your progress, so cheaper money. But they have different programs, 9, 12, a year, 2 years.
Fantastic. Okay, so now we're in there. What happens in that difference, right? Because they'll go a percentage of loan, and then there's a little space in there. So let's just throw some easy numbers so people following us here, okay?
All right.
We have $100,000 purchase price. We just make it easy math. I know those of you in California, New York, and that kind of stuff, just add another zero. You'll be comfortable. Okay. Or put another comma in there. You'll figure it out. But $100,000, and that's the value of the property.
Yeah.
Okay. So a hard money lender, let's say they do 75%.
Okay.
So they would do $75,000, correct?
Correct.
Now we have a $50,000 rehab. Okay. So let's push our ARV out to 200,000.
Okay.
We have a 50. This isn't a whole lot of spread, but we have a $50,000 rehab. Okay. So we're going to be into it 150,000.
Correct.
Okay. Will they do 100% of the rehab money?
They do. Sometimes, of course, you got to pay for that. So sometimes if we have the money to save us a couple $1,000, we'll put it in the rehab. But if needed, they will provide it.
Okay. So let's say they do 100%. That's 50,000.
Got it.
But then we have the 100,000. They're only going to do 75% of. So that means we're lacking 25 grand.
Yep. The down payment. Yep. Or the rest of it.
Okay. So this is where everybody gets stuck going, well, what good is hard money if it won't be 100%?
Yeah.
Right? Logic says that. The other side of it says, well, they got to have their butts covered. They got to cover their money, minimize their risk. You got to have something in there.
Yeah.
So you and I both run with that. Where do you go? You brought it up and you said, if we have the money, we'll come in with it. What if I don't? I'm brand new. I don't have the money.
Then use it. Get in there.
Where,
like you said,
okay, so I need that $25,000. Everything else is financed.
Okay, got you.
So where do I get that? Is that what you're saying? Leverage some of your credit cards?
Yeah, credit cards and you're like, man, it's so, and then your credit cards, you might have a high interest rate, right? Like 19-24%. But remember, you're only gonna borrow for like 3 months. So let's say 25%. I'm sorry, man. I'm a real estate investor, not a rocket scientist. So I'm gonna use my little calculator here. 25,000, let's say even 20%, that's 5,000 a year.
Right.
Divide by 12, that's $416 a month that you're paying on your credit card payment, but you're only going to do it for about 3 months. So you're only going to pay $1,250.
So that's cheap money.
Come on, 25,000 and you only pay the people wherever you get it from to $1,000.
That's where everybody freaks out with real estate. And that's why I'm glad you and I just have this little open, guys, think of money in this as a leverage.
Man.
Right? That's why I always say, you remember back in some of the trainings, so I always say negotiate numbers and take home money.
Yeah.
Because when you start negotiating money, you get emotional. That's the whole thing about money, man. Years back, one of my life insurance in the field trainers, he always said, nothing changes your emotion like the rise and fall of your income.
Oh, I still agree to that.
100%. If you're up, it's a party, right?
We have 3 figures in the bank as we're, sending out the troops, the golden retrievers, I call them. They go back and bring back more. As they start going out, implementing and being in the house or in other ventures, and then the money starts going down, it's still there, but it's not, you can't touch it. So I'm like, oh man, it does hit you, but it always comes back,
Yeah, years back, when my wife and I were just getting this all going and the babies were just tiny and all that kind of stuff, I handled the checkbook.
Okay.
And I was a nervous wreck all the time because of that concept. You'd see the fund go down, then you'd see it come up, and then I'm a happy boy, and then it's going down. Finally, my wife walked in one time and she goes, "Give me that book." And I am so grateful that she did, because she handles all of that. I know what I'm good at doing. That's not it.
Yeah.
Right. And so now, even to this day, after all these years of success and stuff, I'll still send a text to her, "Babe, I want to go buy this. Are we okay?" And she just kicks back and she goes, "Yeah, babe, we are. Everything's good." But it's just that whole thing. And maybe it's kind of where we came from, kind of the upbringing or that kind of stuff.
It's still deep in us, right?
Yeah, it's built in, because I came from an okay family. We didn't hurt for anything, but we didn't have a ton. It was my parents were hardworking people. Mm-hmm. Then I get in, okay, now the divorce and everything's taken from me and I didn't have anything and I'm trying to hide, so that this guy doesn't come repo my car and this guy doesn't knock on the door and serve me something. Now I don't ever worry about that. But I think, deep in there's that little.
Yeah.
So it's like, man, if I have this much in the bank, everything's good. If I have this much in the bank, oh man, I'm sweating bullets.
Yeah. I mean, that's where we're at. And I was there too. It's kind of reminds me of Elon Musk, right? He sold eBay for a couple, 300 million, whatever, somewhere around there. He reinvested it into SpaceX and a Tesla, and he was broke because he put all his money into there. So even though he was a millionaire, he was broke at that time. So I feel that way sometimes. Like I have the money, but it's here. It's at that house. It's in this venture.
And see, that's the part of a mentality of the entrepreneur, if we title that, right? It's just that personality of going, it's going to do this. It's going to do this. And one of the things I always tell people, if you are so dead strong on keeping good credit, don't invest in real estate.
Yeah. I mean, if for instance, when I use my credit cards on a project, let's say I use more than 50% of all the credit I have, the credit cards, it dips.
But then you pay it off,
and then
it goes right back up.
So it's a game. Instantly, a month later, once you pay it, back up. But
so maybe a better statement is don't get involved, but just understand it's going to be a rocky road.
Oh yeah.
So my wife and I play in this game going, she maintains her credit. I let mine go like this.
Yeah, yeah. That same here. Same here.
Yeah.
Deanna
So
has everything
in your
yeah.
household, right? So yeah, she's maintaining credit, and yours is doing this because you and I are poster children for what we're doing.
Yeah, yeah.
Yeah.
Oh yeah.
And so if you're okay with this, you're going to succeed all over in business.
Yeah. And you have to be okay. You have to be.
Yeah.
And now I'm used to it. Like when I see a 500 and then a month later it's back to 750, 800, I'm like, yeah, you know.
Exactly. Yeah. A couple of times you go out into your garage and are we doing it right?
Sometimes. Yeah,
Are we doing it right? Are we doing it right?
Yeah,
And then
yeah.
it's big time. And you're like, yeah, we're doing it right. We're doing it right. I mean, you last couple of weeks or so, you were partying like a rock star with your mom, giving her some of the best memories.
Oh,
and that's what it's about, right? You set in those times and you go, this is why.
Big time.
This right here is why you go, okay,
yeah.
Right? So the other piece that I wanted to bring out is private money. Private money, guys, don't get scared with it. Private money is somebody you sit down and have a conversation with them, and you figure out what they want to do with their money, and you figure out how you can secure it for them so there's no fears, and you move forward with it. So you got traditional money, you got hard money, and you got private money.
Love it even more. Yeah.
And all of that. And then when you have all of yours, then you figure out how to leverage the others stronger, multiple
exactly.
times, right?
Big time.
The one thing that I'm going to throw out, and I know, Victor, you agree with me 100%, the last person to get paid is me.
Always. Your investors, your partners get paid first, and they always come back.
That's it right there. The real simple, guys, keeping this week, we want to focus on having you understand a little bit more of the money. Okay. And understand that, yes, we leverage people. We leverage money on there. We're not these massive people that want to just move our money, because even the big dogs leverage their money.
Yeah, for sure.
Elon Musk, he leverages all the time. You just simply do that. That's why you make more money, because others have more money. It doesn't matter. Elon Musk could have, I mean, you look at Bezos with Amazon.
Oh man.
Right? He's still going to go leverage money to build a new factory or new distribution center. He's not going to take and write a check for it. He's going to leverage a loan to put a mortgage on that and build it out.
Yeah.
See, same concept. He's just taking it, and then he lets the business running in there pay for that facility.
Yeah. So it's pretty cool. It's called the velocity of money, right? You use all that leverage, money, credit, taxes, even, the way you write stuff off. Man.
Dude, you ended a perfect session today. Velocity of money. That's exactly what we got to do. So guys, don't freak out on it. Relax, reach out to us. Okay. I'm RG Williams, successwithrg.com. My partner is
Victor Quick, oneuphomes.com, or find me on Instagram, Epic Boy Wonder.
Epic Boy Wonder. Everything for me is Success with RG. We teamed up because we trust each other. And guys, we've got properties and we got training for you. You want it? Reach out to us. Oh, the other thing that Victor and I want to share with you is we have a really cool property tour. Come hang with us, or whatever we want to title it. November 11th through the 15th in Indianapolis, Indiana. We're going to be hanging out there with guys coming in. We've already had a huge, overwhelming response on it.
Yeah.
No charge, guys. No charge to come hang with us. You just have to take care of your airfare and food and hotel. You take care of your stuff. But come hang with us. This isn't a pay us to train you. This is on the ground, boots on the ground. Come hang with us, man. So throw those dates in there, November 11th through the 15th. We'd love to see you out there. If not, we're going to see you next week on another podcast.
Yeah, for sure.
All right, guys, everything good for me, Victor. Go knock it out of the park, brother.
All right, let's do it, man. I gotta make some more calls right now. But
yeah, I can see you going, Dan, dude, just shut off.
No, but
perfect, man. Okay, we'll talk soon.
All right,
buddy. Be good. Peace.